Good afternoon, everyone. We are the graveyard shift. In wrapping up, my panel and I will sort of look at the key takeaway points from this conference. But just to start off, we'd like to once more congratulate the BSE. These initiatives are indeed very, very good. I think as a regulator, the BSE is definitely keeping up the pace, and I think the stakeholders really appreciate all of the work that's going into this listing initiative. But it's also a great networking space as well for the various industry players. Now, in terms of the panel, I'd like to introduce Kopano on the far right, Khotso next to Kopano, Nelson, and Rob. And what they'll do is that they'll dissect the various panel discussions and other issues that were discussed. So just in kicking off, Khotso, panel discussion one discussed a number of issues, looking at the current economic climate, key opportunities and risks, economic risks and challenges in Botswana, and expanding into other African countries. Can you just give us a summary of what you feel are the key points that we can take away?
Thanks, Mituel. I think for me, I think it was Kesero from Stanchart who talked a little bit about the budget and the Botswana budget and the areas of opportunity that came from that. And I think you talked about the different sectors. He talked about water, electricity, and construction as some of the sectors that he sees quite a fair bit of opportunity in. I think in talking about the risks out there, it was interesting, and I think pretty relevant that commodity risk came up as something that was a bit prevalent, and it's something that we in Botswana, I think, have felt with the closure of the BCL mine as well here. And then I think one of the key things that came out for me that was a really big takeaway was, I think from Gardner, from S&P, when he was talking about Botswana's rating, that we have the best rating in Africa, and that presents an opportunity with the stability here for us to look into the rest of Africa and the African continent, and the ability of companies in Botswana to raise capital at a competitive advantage. And I think that's one of the things that has made companies like the Letseros of this world, the Choppies of this world, and the Safalanas actually to succeed as they go out into the region. Obviously, each country has its own potential country risk. As you said, if you go to Nigeria, you're attracted by the population, but you also have to think through the country risk there. If you go to an Ethiopia, which is the next one, it's got its own particular issues with country risk. So a very lively discussion.
Thank you very much, Khotso. Did you all hear Khotso? Is it clear? Okay, thank you.
Okay.
Right, and moving on to panel discussion 2, which looked at the diversity of funding options for SMEs, via local capital markets and trends, and looking at also assessing the relative value of capital markets funding versus other sources of capital. Rob, I'd like you to just, share with the audience what you felt were the key takeaways from the discussion.
Thank you, Boitumelo. So, in addition to what was discussed then, I think what I would like to talk about is the diversity of funding available for SMMEs, is the concept of disintermediation. So, I know today is all about the BSE and stock exchanges per se in Africa, but there's a world of funding available to the SMMEs via disintermediation. And that is really, for those that don't know, is the ability to raise funding from financial institutions without necessarily going to a bank. So that would be going directly to the institutional investor or angel investor, wherever it may be, in order to negotiate with that entity directly. So the whole diversity of funding that's available does depend on, as was mentioned on the panels before, the life cycle in which you're at. In other words, when you're in a startup operation, then you need to go and explore the equity options. In other words, then you need to go and address the private equity firms or the angel investor. For that entity to then come to the BSE is somewhat difficult, and that's why there's the venture capital available. But the venture capital board has its own limitations that has been already described. So in addition to that, so in other words, what I'm suggesting is here, the form or level of disintermediation, and I think the SMME, and in fact, this is anyone. It doesn't have to be it can be a large entity, in fact, that isn't in fact listed, that is looking to raise capital. And that capital, I must add, is not necessarily equity. It can also be debt. So the whole point is that there's a whole myriad of opportunities out there, different products. In other words, the private equity firm will have equity. There's mezz layers. In other words, there's a mezzanine availability out there. So the entity can say, instead of giving up or diluting equity, I'd rather raise a layer of subordinated debt in the form of mezzanine debt. And in that, there's convertible equity or convertible bonds or convertible debt from debt to equity. But that's potentially if that's in the event that there's a listing available, because that needs to be priced. And then there's crowdfunding that was mentioned earlier. So crowdfunding is, whilst it's small, SMMEs are typically quite small as well. That definitely is an opportunity that is available whilst it's in its infancy in Africa, absolutely. However, it's very successful in America and Australia. There's platforms available, and they're cheap. I personally do it for my own charities and the rest of it. And I have to tell you, the alternative funding available by these wholesale institutions are there. So the whole day is all about the stock exchange. I'm telling you now, if you approach these entities and do peer-to-peer funding, is another option as well. So, I mean, I could go on the whole hour about this whole entity, but the point that I'm trying to make is there are many different opportunities out there, and I think education has been a strong theme that's come through, and that is available from the likes of intermediaries like myself. Do you want me to go on? I can go on a lot more, but I'd rather give
actually, my intention was to give each of them about 2 hours each, and I hope the audience is quite happy with that. Yes, I agree with you, Rob, and I think one of the earlier speakers actually alluded to the fact that, sometimes you've got to have resilience,
Yes.
and education as well that you mentioned. Some of us aren't aware of these other things. So I think sometimes what this economy also needs is mentorship, where you have mentors who can actually mentor these startups, these SMEs, and basically teach them about the different ways of raising money. Khozo, do you want to add on?
Can I just interject this quickly? On the previous panel, I mentioned in the East in particular, African Development Bank. I'll be very quick. African Development Bank have a really good initiative that are they're making funds available in dollars in order to start those kind of initiatives, in order to go out and physically actually teach the intermediary, teach the investor, teach the potential issuer or capital raiser of how to do it. So they're looking to develop those capital markets, and I think that opportunity also is available to us as a market.
Absolutely, thank you. Khozo, would you like to add?
Yeah, I think one of the things that came up was, obviously, I think, bank lending is still practically the prevalent way of funding, and it's not going to go away. But, one of the things that was mentioned was about regulation. That there may be a fear of regulation. I think Mohammed from METSAF sort of said, you have to look at regulation not as an impediment. You know, it's something that's there to stay. But when you look at actually what that regulation does, it's the sort of things that you should have in a company anyway, and you should look at a listing as practically, you know, growing up. I think, you know, you have to become accountable to boards, you have to have corporate governance, and those are things that you should really desire in any case, right? The regulation just formalizes them. And therefore, I think for me, the big thing that came out of, you know, what he was saying was, at the end of the day, you shouldn't look at regulation as an impediment. It's actually something that encourages you to get to where you should be anyway. I took it as SMEs should look at, you know, the regulation is an opportunity for you to grow up and to put the right structures that should actually allow your company to thrive anyway.
Right. Thank you very much, Khotso.
Thanks.
I think you're quite right that the issue of corporate governance as well, I mean, we've heard it come up time and time again. I mean, people really want to put their money in a place where they're sure that these things are actually considered. Nelson, panel 3 were talking about the whole, demystifying this whole thing about listing, because I think for a lot of companies, listing is actually something that is perceived to be a great effort, and some people just want to avoid it. So what were your key takeaways from
Okay,
this?
thanks, Bitumelo. I think just thinking about that panel 3, which was made up of people that have actually come on to list, and so we can actually take real life examples from them, you know, from Affinitas to BTCL and Shumba. But the key points that I've taken from just about all of them is you know, a number of things. One, your team. And the team can be broken up into 2. Your first level of team is your corporate governance team, the people that work with you to run your company. And I think one of the things that have sort of been coming through throughout the day is that a lot of SMMEs or entrepreneurs are still into holding everything to themselves. But obviously, if you're going to ask somebody to put money in your company, you're going to have to, you know, show them that they're not just putting it in your pocket, they're putting it in the company. And so the first team of corporate governance helps you to develop that. And so if you start appointing directors very early on, the whole idea of listing, it's about preparation. So maybe you might not list this year if you're hearing this for the first time, but you might say in 2 years' time, I'm going to get my company to the point where I can list. And to do that, your first level is corporate governance. The team that's going to help you, your accountants, your lawyers, within your own company, that's going to be able to help you to get there. And when you are ready, your second team is the team of, that basically now helps you. And that's going to be that 9-month period where they are helping you. You know, you get, they mentioned quite a number of the people that are required to be able to help you to do that. But, you know, your lawyers, your advisors, your team of advisors that will be able to help you, you know, across that. But by the time you get there, you must have spent enough time yourself getting yourself to that point. And another thing that is being demystified, I think, is the idea of cost. And obviously, we were told some numbers here that we all needed to be sitting down when those numbers were mentioned. But it's one thing also to think about those numbers not as something that money must already exist in your pocket. It is part of the process of you going to the market to ask for money. It's a percentage of that will come. So it's not 10 million that must be sitting in your pocket already. So if you're trying to raise 100 million, the cost will be covered as well. But obviously with your corporate governance team, and you know, first of all, if your team is ready, your systems are ready, people will be willing to put money in there. And of course, those costs will be able to come out of that as well. So in terms of demystifying the whole story, we've seen, as it was pointed out, Affinitas came, but they came with a good story. And that story will be written by your first team before your second team takes you. So that's the team that helps you to get your systems in order, to get your company running the way it's supposed to run. And when you're ready, it's easier to go to the next team that takes you all the way. And then cost doesn't become an issue in those sense. Those are some of the things that I think I picked up from that panel that panel that was here trying to show us what they had to go through to be able to do that. Now, obviously, a company like BTC that had already been functioning, that is your blue chip company. It will already have issues. Obviously, restructuring will be one of the things that you're going to have to go through.
All right. Thank you very much, Nelson. And I see that affinities are actually, they've been mentioned quite a lot. And I think we might coin a phrase, do it the affinities way.
There you go.
And then, Kopano, when we look at the issue of addressing barriers, I mean, who better to give us the key learnings than you, since this is one of your core competencies, obviously at the BSE, where you're trying to really simplify the process as much as possible, yet keeping with the regulatory issues, and also grooming companies to list. I mean, we heard the CEO of the BSE saying earlier that they don't only hold conferences such as these ones, they also hold select and focused meetings with companies, to encourage them to list. So, Kopano, would you just give us what you think were the key takeaways?
Thank you for that. I think I would begin by possibly referring to a statement which was made by the acting president in his earlier presentation when making reference to candidates within the Innovation Hub, that companies need to strategically and synergistically link themselves with the BSE. In my interpretation, what that means is that as a company that is looking to operate as a going concern, you need to have a listing as a growth point within your life cycle. So you don't just run a company or start a company and you have no idea about what the plans look like in the short term, in the medium term, and also in the long term. So that is key for Botswana companies particularly, because we've had experiences where we've seen companies emerge and disappear from the face of earth, particularly family-run companies, which get extinguished by competition or by failure to adapt to new ways of doing business, including technology and so forth. So that's a key thing to bear in mind. Now, from the panel that was talking about the barriers, one of the things that really stood out was the issue of cost. And I think Mr. Letshweni here has touched a little bit on that. But I got the impression that, to some extent, the costs that involved in a listing, particularly pre-IPO, to some extent, management has control of that. If I'm to reiterate some of the things that they mentioned, there has to be proper information flow. There has to be transparency. You need to meet the deadlines. There has to be timely disclosure of information. Those are some of the things that become important in terms of reducing the amount of time and the subsequent costs associated with the advisors involved in a listing. But it also became important to the audience to understand that a company that approaches an advisor or a capital market intermediary and is in a bad shape, that means it needs some sort of restructuring of maybe the contracts, restructuring of the businesses that it has, and just the holistic repackaging. For it to be sellable as a story to investors would require a lot of effort and therefore a lot of expenses. What we have noted as the BSE is that, particularly if you refer to the figures that Mr. Desai mentioned, the money that was paid by Wilderness, Choppies, Affinitas, Far Properties, and so forth, that's about 2.5 to about 3% of the capital that they raised. Even though I don't have the international benchmarks, I think that's quite substantial to any company. And there are specific reasons why that is the case. We have limited expertise in terms of corporate finance in the market, legal advice, transfer secretaries, accounting firms, and so forth and so forth. So there are only 1, 2, 3, 4 companies that are quite experienced and capable in that space. So what we have resolved to do, if you refer to our revised equity listing requirements, which are still with the regulator, is that we want to open up the landscape a lot more by introducing what we refer to as a panel of advisors, where we invite all sorts of companies that are involved in the capital markets intermediation space to come and register with the BSE, so that we can have a significant number of lawyers that have the potential to advise companies, significant number of corporate finance firms, transfer secretaries, accounting firms, and so forth, and so forth. So we think this is one of the things that would actually, in the long term, result in maybe reduction in the cost of listing due to competition and also availability of options as to who to speak to. So in other markets, that's the sort of trend that people are adopting, that there has to be an enabling ecosystem of intermediaries in order for SMMEs, startups, small, medium, large enterprises to be considered, and not a case where intermediaries would only consider companies of certain scale and also companies of certain growth size.
Thank you very much, Kopano. In terms of, perhaps you can just update us here as the audience, in terms of your efforts, would you say in the next sort of 6 to 12 months we're going to see new listings in terms of the work that you've been doing with companies?
I share the same confidence that the BSE has talked about. If you look at the first few pages of the conference booklet, we believe that the inaugural listings conference, which we held last year in March, has actually opened the BSE up to the business community. And subsequently, we've had a lot of interest from companies that are looking to list. Some of these companies, interestingly, they come quite prepared in the sense that they would approach us when they've appointed a sponsoring broker and all the other variables that are important. Some come just to further the education that we imparted at the conference, so to say, to arrange for one-on-ones meetings and so forth and so forth. And for us to be able to see companies that are approaching us, if you have appointed the sponsoring brokers, immediately that gives us the impression that there's a possibility of that company being successfully listed. So I would say this year looks like quite a fruitful year for us, not just in terms of equity listings. We've had quite a few in terms of bonds because of the efforts we put in last year, and we are continuing to. And also in terms of other products that we would gradually become accustomed to.
No, that's fantastic. I'm sure that's welcome news to all the asset managers in the room today. Rob? When you were giving us your views regarding panel discussion 2, you talked a lot about how companies can attract funding. Now, in terms of the right pitch, panel 5 discussed how investors can actually, how organizations can sell their businesses to investors, make them want to put their money in there. So can you just summarize for us what the key takeaways were?
Certainly, thank you, Boitumelo. So I think there were several panelists, in fact, that discussed getting house in order. So in order for a company, no matter where it is in its life, if it wants to attract any form of funding, it has to have the relevant house in order. That would be from governance to financial accounts that would be audited, preferably by an authorized audit firm like Deloitte. And the whole point is that, and again, that was mentioned on several panels, if a company is pretty much closed and run by the owner, they're not used to divulging information because it's typically quite sensitive. So and that's why there are structures in place, and that you've got to divorce the owner from the actual from the company structure, and that's really, really important. So, I mean, I'm not going to divulge, but I think that is a really important element, is that when you go out and approach funding, whether it's in fact listed or not, bearing in mind you don't have to go listed. You can, if you're going the equity route, absolutely, then you need to go listed, and you need to divulge all your information as well as risks. In other words, you need to identify certain risks that you may encounter, and that as an investor they may encounter, and the mitigants thereof. So you need to divulge all that. And then you need to have a good team. It's really, really important. Good team, and mentor in different phases of teams. Then the startup team, the second phase team, then the running team of the business as well. And what I would also like to mention here is that a lot of conversation has been around the BSE and the listing of the equity, one way or the other. I'd also like to comment that once the equity has been listed, or once a company is large enough, they may use the Botswana Stock Exchange to raise debt. And it hasn't, and I'd just like this opportunity to just highlight the fact that once you have a capital structure that is significant, that can accommodate debt, and naturally the normal process would to be approach your local banker. And in Botswana, you're very fortunate. The banks sit with a fair amount of liquidity, and they typically throw money at you at reasonably good prices. However, the Botswana market, in particular the capital market, have a massive depth of listed bonds, unlisted bonds available to you as well. So once you go through this whole process, don't forget that there are alternative mechanisms to raise debt as well as the equity.
Absolutely. Thank you very much, Rob. Nelson?
Yes, just to add on what Rob was saying as well. I think the whole idea of the pitch is sometimes we think the business plan is enough, but the business plan it's a very important document. It guides you as an entrepreneur, but it doesn't necessarily tell the whole history, track record, and all of that stuff. So the team of advisors that you get is one of the ways that you make sure that your pitch is great. You're able to, most entrepreneurs are so good at their work, but they can't really tell you how they do it. So to get somebody who can write your story, or to get somebody who can be able to help you with telling it in such a way that an investor will buy into, that's where the key is in terms of getting advisors to come and help you. Say, here's my story, here's my business plan, here's my accounting stuff, but is this enough to convince somebody to buy into me? We need more, advisors to be able to help us. So as Rabuloko was mentioning earlier on, that team that they're going to put together at the BSE of other than just extra panel of advisors, it's another thing that entrepreneurs can tap into that and say, who do you have on that panel that can help me? I'm trying to write my story, but I'm not too sure how to do it. I'm trying to do all of this on the back of all the other things, the governance issues and all the stuff that are in place, which is very, very important. But how do you pitch? How do you go out there? You might still, as an entrepreneur, need somebody to come and help you to put that story together.
Thank you very much, Nelson. In fact, the other day I had an interaction with someone who actually said to me, the companies who want to list on the BSE stand a good opportunity because there's so much money in the market looking for a home that you don't even have to do any pitches. So that was a perspective from someone across the border.
If I can just add one thing, sometimes that control issue that people are so afraid to lose is you shouldn't. I mean, the rules, the BSE rules say float 30%. If the minimum is float 30% of your thing, you still have 70%. That's huge control, but it's a step in the right direction. In the future, you could float some more as you go on. But those are some of the things that people shouldn't be afraid. So in the name of demystifying listing, it is really not that complex because the other things that are regulations, they're already helping you anyway, whether you list or not. Your governance structure is very important. Whether you list or not, you still need to have those things in place.
That's a very good takeaway, actually, Nelson. Very good, well-meaning regulation really helps you as well, to get your house in order. Because, I mean, you you have these great reports where you can see how the organization is doing. You do proper reporting, so it really does assist perform and helps the company to perform better. Kopano, African stock exchanges, panel discussion 6 discussed Africa, looking at African markets, and we had a panel that consisted of individuals who actually know what they're talking about, because they're actually involved in this space. So, what do you think the key takeaways are?
Most of the challenges that African stock exchanges face were extensively dealt with. Issues of small size, illiquidity, inefficiencies. And there's also an issue of the need to integrate, so to optimize infrastructure instead of having isolated infrastructure where you could use one. I got interested in the question that came from the floor. I think it came from Eben Soul, that sometimes they don't, and from a gentleman here, that sometimes they don't get as much support as small companies or medium companies from investment institutions. Like the reference you made to the gentleman that spoke about excess cash in the country. I think that's the reality we're faced with right now, that there is a lot of liquidity in the market in terms of cash that is chasing few investments. If you look at the African landscape generally, pension funds have grown at phenomenal rates of over 10%, 20%, close to 30%, 400% in Ghana and so forth. However, the economies have not developed at a similar rate. Even the stock exchanges have not developed or grown at a similar rate. Why is it so? It is because this cash that is growing phenomenally does not find homage. Companies do not come forth to share their risks, to share their prospects by listing on a stock exchange and accessing these deeper pools of capital. And it's only when they do that economies can develop. Choppies has to access capital for it to build shops, for it to support the malls that are built by a property company, and so forth, and so forth. So the key takeaway from that panel discussion, maybe just as a sort of an augmentation, is to say there is a lot of cash here in Botswana from institutional investors that is looking for investments in your companies. And with the messages that we are taking away today, I think it makes the right sense that you come forth, you engage with the relevant people with a vision to list. And one of the interesting developments within this market in particular is that one of the biggest pension funds in the country is looking to support, I'd say, development of the fund management industry by allocating sizable investment mandates to them in terms of cash. And if you look at these sizes, it is companies like yours that will be required for this money to find homage and for this asset management industry to be groomed in the way that is envisioned to be groomed. So really, I think the playing field is quite level. Maybe what's lacking, which came up from the panel, is lack of awareness, or maybe the limited reach of the education about the stock market in terms of the benefits and how you go about doing it. But like we've said, we've become more approachable. We've even changed our approach in terms of speaking to companies. One of our values is to be commercially oriented, and we are quite aggressive in that respect. We really, really go out and speak to business owners in their offices, or they come to us, or we meet at the golf courses, wherever, so that we heighten the level of awareness. We actually help you to grow onto the next level, go on the trajectory that our 12 companies that we speak of have gone by using the springboard, the BSE as a springboard into African markets. So that's what I wanted to highlight, that there's excess cash. Then the other thing is that maybe the entire capital markets value chain also has to catch the same kind of energy that the BSE has, because we can't be successful when we work in isolation. Asset managers have to have to support the industry. Brokers have to be a lot more mobile. Other intermediaries, advisors have to be a lot more agile. It will take the entire industry value chain in order for us to be able to help these companies and help this market grow.
Thank you very much, Kopano. And what Kopano was alluding to was the incubation program that as pension funds, we need homes. We need homes for our money. We need to have more opportunities for investments. And we felt that since the market was not well developed in terms of private equity and in terms of having our own homegrown asset management companies, we felt that perhaps a well-managed incubation program would kickstart some of these activities. And hot off the press, it's actually in the papers on Sunday. So in terms of the discussions, I think the panel has gone quite some ways into unearthing the key takeaways. I'd just like, before we close up, I'd just like to ask if any members of the panel would like to add anything at all that you think we may have left out.
Yeah, I think for me, I was very interested when, the questions came from the floor to the CEO of the Botswana Stock Exchange, Thapelo. And I think, when he said, look, at the end of the day, when people invest in your company, I think the gist of where he was going was, it stops being just your company. I'm not going to give you money and it stays your company. It becomes our company. And when it becomes our company, you become accountable to practically, everybody who's an owner there. And a discussion around giving away shareholding. At the end of the day, I think it's always better to own not 100% of a small thing, but I'd rather have a small part of a really big thing. And I think, that sort of stayed with me as one of the things you were saying.
Yeah. I think to that also possibly I could add that, the best companies in the world are listed on a stock exchange. And even here at home, the best companies in the country are listed on a stock exchange. So it makes sense that if you really want to grow your company and be amongst the best, you come forward.
Yeah, I think my last word would be, that's exactly that. The legacy, it grows better when it's out there in the public. And if I'm holding it on as a family company, hoping to give it to my children that are not interested in it, and then they're going to mess it up anyway. So it's better just to get a piece of it out there and get everybody else to benefit from that as well. So in terms of African companies that can build great legacies into the future, is the stock market is one of those places. And as our theme today is, the gateway is right here.
Absolutely. Rob?
Two things, if I may. The first is the BSC is, the CEO mentioned just now, is in a fantastic position to be able to provide very pertinent information to the market. And it's information about the existing listed entities. And by that I mean is, in the event that someone wants to come to market, they're always looking for a benchmark. And the benchmark, if it's listed, makes life very much easier for both the people looking to invest, that's the investors, the credit teams, et cetera, et cetera. So my request is that the BSC and any other stock exchange for that matter is that utilize the wealth of information that is within and make it available either at a cost or not, preferably not, to anyone via the website. And what that does is it opens markets to people because they are able to look what's available out there, and it gives really good ideas. And in addition to that, I'd just like to make another plug for the bond market. It hasn't been really discussed at length, and I come from a debt element, and I have been very fortunate to be part of the team that listed the most recent debt bonds on the Botswana Stock Exchange, and that was for prime time. Now, what that did was release a whole lot of additional equity and to a company like Primetime. And they're not exclusive anyway. They're known. But the reality is there's a whole heap of other companies out there that have reasonably good equity structures that do have the ability to raise debt. And again, I mentioned that the banks, throw money at these poor clients, but what I'm suggesting is that the capital market offers a very viable alternative source of funding that needs to be considered. Whilst it's not always necessarily cheaper because there are costs involved, but what it does do, it creates pricing tension and it keeps everyone honest, and it creates additional markets out there. Because that money is sitting idle, the asset managers are sitting in a situation where they don't have a lot of assets to invest in. So they typically just invest in the sovereign stock, which is easy, it's boring. So in order to enhance the returns, they would like to invest in credit. So that would be coming from sort of the medium enterprise that's available out there. So I appeal to medium and large-sized companies to look at the BSC to avail itself of the debt market as well.
Okay,
Thank
thank
you.
you very much. To thank the panel. And also like to ask the ladies in the room today that ladies, although we love chairing committees of males, today was really, there were more men today. So perhaps the next conference, Dr. Tseole, perhaps we can include more women. Thank you very much.
Thanks. Thank you.